Bitcoin testing year lows is the analysis of the price chart that the Brooks Trading course gives us. Let's read through the article and see what they say. This article was posted by Joseph Capo on September 4th, 2022, and this is the market overview. Because there is a heavy magnet around $30,000, traders think that the price will get there at some point during the next quarters. However, before that happens, the price might suffer a 25% price decline from current prices by testing the 2017 close. This would also mean about an 80% decline from all-time highs. This is the monthly chart of Bitcoin futures. This month's Bitcoin candlestick is a low one sell signal bar. The monthly bar traded above July's high, triggering the high 3 bull flag setup, but the bulls failed as the price reversed down. Not only that, the bears closed below July's midpoint, a sign of strength of the bears. After July's bull momentum, traders thought that there would be a test of June 2021 low. So far, August failed to test the June 2021 low, and now it is headed to a new low of the bear leg, which will happen by trading below current year lows. If there's a new low of the year before first closing that gap between June 2021 low and the August 2022 high, the bears will probably test the 2017 close at 14,470. This is a 25% decline from current prices. Bulls hope that this open gap late in the wedge bull flag, it's just an exhaustion sign. They think that the worst case scenario is a trading range. Therefore, they believe that anything happening on this chart is a good excuse to buy. They might not be wrong for now, while the price is above the major lower high which preceded the bull breakout in late 2020. Bulls also want September to reverse up, closing above the 50-month simple moving average and form a micro double bottom. Bears see a good stop entry setup, low one on a bear trend, but they know that we are late in the bear trend and the context is probably a broad bull channel or a trading range. Furthermore, this would be the third leg down and there are many intermediate support levels right below. Bears selling below the August low are trading small and might be willing to scale in higher in case they are proven wrong. June's close was a semester close, the most important price of the year so far. After the semester close, the price reversed up. Traders won't be surprised if this happens again. Traders will be looking for reversals at that price on lower time frame charts. By context, the price is likely at a buy zone of a broad bull channel or a trading range. Traders should expect bullish pressure during the following months. The price might test the 2017 close before higher prices, but both bulls and bears will buy any price decline. If the bulls surprisingly close the gap between current prices and the June 2021 low before there is a new low this year, it will probably mean that a bull leg has begun. Good stop entry bear setups at a buy zone of a trading range are actually good bull setups. If we are in a trading range, we should expect buyers below August lows, but because the prior bear leg was strong, we should not expect strong bull bars. Therefore, most likely, the September candlestick will be a bear bar with a tail below, or a bull bar with a tail above, or doji. This is the weekly chart of Bitcoin futures, and we can see a loss of bearish momentum. This week's candlestick is a bear doji. It is the third consecutive bear bar after a bear trend resumption. However, traders see a loss of momentum from the bears as the bars are decreasing in size. Bears are near current year lows. They think that if they can trade below, some bears who are trapped will exit their positions accepting a loss, hence driving the prices lower until their targets are reached. Their targets are a measured move of a prior bear flag, the 2017 close, or even a leg 1, leg 2 projection. Because the bulls did not close the gap between the 9th May low and the 15th August high, they won't buy below the lows of the year and will wait until the reversal pattern happens before buying again. As stated before, it's hard for the bears to sell here because this is the third leg in a bear channel and they feel entering late. Thus, if they want to short, they will use a very small position size. There are trapped bulls above, and this should be a concern for the bears willing to sell. If they achieve a new low soon, the next reversal up will probably fail. But if they fail to make a new low and the price closes the 9th May gap, the third bear leg and continuation of the bear channel will likely be over. Because there's a loss of momentum, we should expect a retracement happening within the following 1 to 3 weeks, testing prior week's highs.